Ftmo family, what is up? Yama Trades trade recap today. I took two trades. Actually totaled. I took three trades on two pairs, GBP USD and GBP JPY. I want to recap these trades to you guys to let you know what my pre-analysis was, my analysis while I was in the trade, and how I ended up closing out these trades. Now, before we get into that, you know the deal. If you like this video, if you like the content you see on my page, go ahead and subscribe, like this video, turn that notification bell on so you're alerted whenever I do drop analysis, trade analysis, recaps, or if I just cover anything dealing with Forex. This page is gonna have a lot of content based around Forex training, Forex analysis, brokers, expert advisors, trading bots, things of that nature as I dive deeper into this industry. So whenever I come up on that type of knowledge, I will be giving it out to you guys for free on my channel. So before I go deeper into the trade analysis, last night I was looking at GBP JPY for a buy. I saw that it was, kind of consolidating in an area I was wanting. Price then eventually broke out. I wanted it to retest a certain area for me to take a buy for it to, shoot up to the upside. Of course, it happened during London session. I don't trade pre-London or London. I typically come in as we're entering into pre-New York. So around 5 a.m. is when I start to look at the charts. That's when I saw that the trade had already played out. But then I saw that it was pulling back to a Fibonacci retracement level. So I decided to, map it out on the lower time frames, take an entry based off of a break of a resistance and to follow the trend to the upside. So we'll go ahead and jump into the charts just to check it out to see exactly how everything played out. Okay, so now that we're here on the charts, put my phone on the floor, make sure we're not interrupted here. All right, so the two trades that I took on January 7th was on GBP USD as well as GBP JPY. Both buys, looking to go long on both positions, which ended up going long, but GBP USD did not work out in my favor. And we'll start off with that one first, just to give you guys an idea of what I was looking at, what I was looking for, why I jumped into the market at that given point of time and what actually happened, right? So let's look here. So we always start on the monthly to see what's actually happening, where we're at, because the thing is, you want to be mindful of where price is currently at. Price could be at resistance, it could be at support, and you go down to a smaller time frame and then you realize that, oh, it's breaking resistance or it's breaking support, but you're going the opposite direction of the overall trend of the market. So here we have, price clearly broke resistance. Now it's making its highs. It's on its way up to this zone right up here in this area here. So let's say 139, 1.400, right? So it's on its way up to this zone here. That's what price is telling us on the monthly, as we got these lows here, and then we got a higher low here, and then a higher low here. So it looks like price is on its way up, right? So now that we know that, we just kind of mapped out two levels. We got one here, and then we got one up here. And then I also drew this horizontal ray on the weekly time frame based off of what I saw from the past, right? So weekly time frame, same picture being drawn. We have this, this nice uptrend, right, where price is just, trading above this trend line, pushing wicks to the downside, letting us know that, buyers are in the market. Whenever we get close to this trend line, buyers are pushing price higher. We broke out of these highs here. So you see resistance, right? We broke above that, retested that, then continued up. Then this candle tried to come down and push below, but guess what happened? We had this massive wick right here on the weekly time frame, letting us know what? The buyers are in the market down here. The buyers are here. And when price came down here, the buyers did what? They pushed price up, right? So we're keeping mind of that. What does that tell you? That lets you know that buyers want price to come into this zone here, that we want to get up into this region here. So with us knowing that on the higher time frames, that should correlate with our lower time frame analysis. So knowing that, we drop down to our daily time frame, right? And then that's when now we're no longer looking super far left. Now we're just kind of focused in this area. As you can see, we have, we got our lows, we got a high, a higher low, a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, a lower low, but then a higher high, and then a higher low. So price is clearly doing what? Structure is going up, right? It's not going down, it's not going sideways, it's going up. It's in a clear uptrend in this moment. And this is the type of markets that we want to make sure that we stay focused and we actually are engaged in. Not sideways markets that are moving, in a range sideways, or markets that are, scrambled all over the place. You got massive wicks to the upside, massive wicks to the downside, because what that does is that confuses you. And when you're confused, you're no longer taking trades based on the edge. You're taking trades based on, gambling, just 50-50. If you hit buy or sell, it's a 50-50 chance it's going to go in your favor. If your TP is set right and your stop loss is set right, there's a 50-50 chance either or is going to get hit, right? So we had this level here, this support level right in this region, because price broke above, it came down to test that, and then it printed this candle here. So price to me was support, right? Then we had some resistance right up here where these upper wicks were. To me, this was resistance. So I drew out my two zones, right? I had my two zones drawn out, and then I dropped down to my 4-hour time frame. So now we're starting to get into the structure of the market and what is actually happening. What is it telling you? That we can actually apply day of, right? The daily, the weekly, the monthly, that is an overall analysis if you're swing trading for multiple days or multiple weeks. But once we get down to like the 4-hour, 1 hour, 30 minutes, these are trade setups that we're taking, looking to get into the market and looking to get out either that day, next day, or the day after. But within a week, we're looking to get into a setup and get out of the setup. So as you can see here, price had came down to this support, right? If we take our Fibonacci tool, because at this point now we can use Fibonacci. As you can see, when I was giving you the top-down analysis from the weekly, the daily, the monthly, I never pulled out fibs because it's unnecessary. It's really unnecessary at that given point in time. But once we got here to the 4-hour time frame where we're looking for our entry, now we can pull the fib from wick to wick, bottom wick to the top wick. We had 61 zone, we had a 50 and a 38, right? So the golden zone that you want to be looking at a trade opportunity within is typically here. On these GBP pairs, I find that they retest this 50 to 61.8 region before pushing higher or pushing lower. So I like for price to come into the zone. When I'm looking at smaller time frames, like the 1 hour, 30 minute, then I can look at, 28, what is it? 28.7. I don't even have it here marked out, but I know when price kind of gets stuck here, it's typically at the 28 level, and I'll take a smaller trade with the same targets as my larger setup that I previously took. So price came down into this level here, started pushing wicks to the downside. All of this down here, let's get rid of this tool. We'll leave that there. All of this right in this region here is exhaustion. All of this is exhaustion. Price came down, pushed lower, got pulled back. Exhaustion. Price opened up here, pushed down, got pushed way back up here. Exhaustion. This candle, the sellers were in control. The buyers were in control here. This would be like a hammer pattern, right? This is a pattern letting you know that price is going to start going bullish. This is a doji, right? But in this period of time, the sellers were more so in control. This is like a bullish Maribozu candle, basically letting you know when you don't have really any wicks to the downside, any wicks to the upside. It's pretty much, they call it a bullish Maribozu type of candle. This is letting you know that in this period, buyers were in control. followed by this candle here. It's like a larger doji because you have the wicks to the downside, wicks to the upside, and then this body here, right? But essentially, I mean, this is the sellers are in control here, so you're not really playing around with that. And then you got like an inverted hammer here, shooting star type of pattern. This would have thrown up a red flag when you had this massive wick. If you were looking at this from the 4-hour time frame, right, that you don't want to jump in the trade, because essentially it's saying that, you know, buyers push price way up here and then the sellers push price back down here, and then it's at support. So that kind of tells you that, all right, price may reverse and start pushing lower. But because the overall trend was bullish, we disregarded this pattern right here on the 4-hour. And then when we jump down to the 1-hour time frame, that's when I was looking for my entries, right? So price had pushed down here. It formed a level of support right here. Right, so we had a level of support that was formed right there. All right, and then price pushed away from that level. And then what happened shortly after that? Price came back down to this level, formed a trend line, and then created another level of support. Once it created support here, and then we had this wick that was pushing the upside on the hourly time frame, that's when you drop down to your 15-minute time frame to look for a break of previous resistance to take a setup. So at that point, I dropped down to, let's see what it was. It was definitely the 15-minute. Yeah, because these candles weren't clear enough for me. Yeah, it was right down here. So this is where, you know, price pushed down. Right, so we had, I just drew a little trend line from like that upper wick to this lower wick. Price pushed down, pulled back, pushed down again, formed a level of support. So there was a support that was formed here, but the thing was the resistance wasn't broken. So price pushed down here even further. And then once it got down there, that's when I dropped down to a 5-minute time frame, because I wanted to find like as close to the bottom as possible, right? And then that's when I ran across this level of resistance. So I told myself that if this level right here is broken, so we have resistance, if it's broken, I'm taking a buy. Now, where I went wrong, because as you can see, this trade stopped me out right here. And before we move forward, I'll put on the screen somewhere either here or over there, you know, just the trade that I took on the day. But I should have had my stops below these lows here, right? Targeting the highs up there. And I know I had, you know, my take profit way up here. Honestly, could have done a solid 3-to-1 risk to reward ratio. It would have hit, you know, TP, but I just felt like price was going to continue to push further up, and it was going to target some of these highs way up here. And that's the reason why I set my TP way up there. You know, I just 3-to-1 should have been what it was, but it wasn't. So what happened was I got clipped into the trade right here, you know, kind of experienced a bit of drawdown, and then, you know, price eventually pushed into my favor. So at that point, I was up about 29 pips. I could have moved stop to break even simply because I was beyond a 1-to-1. But because price hadn't moved enough in my favor, in my opinion, I said I'm gonna leave the stop loss exactly where it was. And then shortly after that push to the upside, what happened was price eventually turned around and stopped me out. So price pushed, it had this nice little push, and then it eventually turned around and then stopped me out. So I was stopped out on GU. It is what it is. $555 loss, I believe it was. It is what it is on the 50K Ftmo challenge. I'm still running that challenge right now. December was a very bumpy month for me, as it is for a lot of traders. A lot of traders, you know, they take that month off. But, you know, for me, I didn't consider December when I purchased the 50K challenge. So I ended up trading into December when I should have just took the month off. I didn't know they were going to give an additional 10 days. So I was trying to trade through it so that I could pass the challenge. But essentially I ended up, kind of going into drawdown, and kind of took me back. So still running the 50K challenge. Once we pass that, which we will pass that, we got to be confident, even if it doesn't happen yet. I will update you guys on that there. But that we took that loss there, and then I was like, all right, cool. I'm gonna go back to my guns, right? My guns being GJ. Love GJ. Solid pair. One thing I have noticed here, and I've been seeing this since, January 5th. So early this week, of this kind of stair stepper pattern, right? So price push down. And I want you guys to be aware, before I go through like a top down analysis, these red lines were drawn before any of this was here. Okay. And when I go through the analysis, I want you guys to pay attention how price is stopping at these levels. So I did not draw these levels when price was here. I drew these levels based off of these highs, these highs, these highs, and these highs, right? So pay close attention to that, right? Make sure that when you do draw levels out and you see that price had stopped at that level, pay close attention to why that happened, right? Look left and see, is there another level that I could have drawn out, right? And if you do see that level, make sure that in future analysis, you're paying attention to that and you're mapping out those levels, because it's very, very important. I could have blindly taken a ton of trades here based off of these levels and would have hit TP damn near on every single trade without even looking at, or without even having price in this area here. Essentially, I would never recommend that, but just based off of what took place here, I just want you guys to be mindful of that. So let's go up to the monthly time frame. Of course, we have a strong support level right down here in this region, in this 139 700 level, right? So we drew a horizontal line plus a box, just so that we can have like a zone mapped out. We had resistance up in this level here in this 144.37 level, right? So we mapped those two levels out. That was just our upper levels and lower levels. Then we dropped down to a weekly time frame where I found this kind of wedge pattern right here. As you can see, price is descending as well as ascending. So you have this like wedge that price is kind of falling into. And then once you get closer to the peak, price either bursts out to the upside or it bursts out to the downside, and it continues the trend, whichever direction is going. So for us, price bursted out to the upside, and it kind of goes in correlation with the trend currently. We had this double bottom that took place down here in this region, right? So right down in this area here, we had a little double bottom, right, as you can see. And then shortly after that, we broke our high, our known high, with this candle here. So we had a higher high, higher low, another higher high, higher low. We had a lower high, but a higher low. We're still in a trend. As long as we don't break this low to form a lower low, and then that three-legged extension where we got a low, lower high, lower low, and then a lower high, and then a low. That three-legged extension past the lows, we're still in an uptrend. So we had, a lot of bullish price action on a weekly time frame. Let's drop down to a daily just to see what's really happening right in this zone here. So right here, we had price in this little range where it was kind of stuck, right, in this little resistance range. So price came up here, formed resistance, pushed down. Form resistance, push down, form resistance, push down, form resistance, push down. So we had a lot of that was taking place in this zone, right? So once you break above that strong resistance, that's when all right, the floodgates had opened and the buyers are now going to step in, right? Price immediately after breaking that zone pushed 150 pips. Shortly after that, we had a pullback. Right, pull back down to that zone. And where did it touch? The line that was mapped out on the monthly levels, right? Because that monthly support right in this zone here is significant, right? Support turns resistance, resistance turns support. So now we drop down to our 4-hour time frame, right? And now we're, we broke above, we formed our highs, we came down, consolidated a bit, right? We have our channels. If you watch some of the other videos, we have like our descending channel, right? So price kind of was descending in this channel, and then we had this like sideways channel. Price was moving sideways, and then we had this upward channel, right, where price was just kind of moving in an upward motion, right? So GJ does all this: downward channel, sideways channel, upward channel, right? So we had all that taking place during that period of time, right? Then we formed a new higher high right in this region. Shortly after forming that new higher high, we pulled back. Some of you guys would have been, all right, now we're going to start selling off. But guess what? Price never broke this low on the 4-hour time frame. So why would you be sell biased if price is just at a low? This was the lowest low. This was a higher high. This was a higher low. This was a higher high. And this was just a low, because it's just retesting the previous low. So never start selling because price retraced 100%. It could retrace 100% and then go 100% in the opposite direction, right? Always be mindful of that. Always be mindful of that. So now that I see that we're at support, before any of this was here, this is what took place. Let's go to our replay mode. We were here, boom, right? So price formed its support on a 1-hour time frame. All right, so it's very clear. We had our resistance up here in this region, support down here, and I was basically just waiting for price to break the highs and form, a new level, essentially. So we broke the lows, right, on the 1-hour time frame, but we're bullish. Remember, we're not trying to take sales. They were bullish bias. All right, we had these wicks, and then price form, boom. Now we got a higher high right here in this region. It is a higher high on the lower time frame, but we had this low and then a higher low. Drop down to a 30-minute time frame just to get a clearer and even clearer picture. I drew this trend line from here from A to B into the future, and essentially what I wanted to see was for price to break above this trend line, consolidate a bit, and then start pushing up, right? Every solid entry, every solid trade that took place on GJ this week happened at 3 a.m. What was I doing? Sleep. All right, boom, price broke above. All right, now we're just waiting for price to form our support on the 30-minute. We got some support formed right here. Right, plus some bullish candlesticks. Nice bullish candlestick pattern, bullish engulfing. We have a level of resistance right here in this region. And to be clear, these are none of my trades. I didn't take any of these trades. I was just watching this. Price pushed back down, didn't take the setup. I wanted to see a break above here. But now that price pushed back down, I want to see it come tap this trend line and then form some form of support for me to be able to take some type of buy bias trade. All right, so we got support. Now let's see if we can break right above these levels here. Boom. That's an opportunity. You jump in right there. Your lows are somewhere down here, 15 pip stop loss. Target 3 to 1s. Let's see what happens. Boom. Solid trade, solid trade. And before any of that happened, remember what I said. Mapped out this level of as a TP. So like a TP1 here because of this high. A TP2 here because of this high. A TP3 here because of this high. TP4 here because of this high. So all of these were mapped out before any of this was drawn out. You can, if you look at the chart, it's a war zone. This is a clear war zone right here, right? Because of everything that was taking place. So your 3-to-1 was smacked. Now that 3-to-1 was smacked, what are you doing? You're waiting for it to retest. This happened where? This happened right around 11 p.m. I was definitely asleep. So it was pushing all pre-London. And then basically smack TP at London Open. Now London Open, what's going to happen? Price is more than likely going to come back to retest. Mind you, price is also at this trend line on the 4-hour time frame, right? That wedge pattern, it was breaking that wedge, right? So now we might have a pullback that takes place. Boom, pullback. Second entry opportunity somewhere around this region here. We have support. But you don't get it, you just keep moving. You keep moving, right? Then boom, price pulled back. If we took out our fibs, we're probably down in the golden zone. Golden zone being right here in this region. Boom, support formed right at the 61.8. Also formed at the 50 moving average. Good confluence, right? Confluence, right? We can drop down to a 5-minute time frame right at this region here and look for an opportunity. Now, because of the time this is 8:05 a.m. So this is like going into like New York Open. This is when this candle is like volume, right? From New York Open, a lot of volume. I did not take this setup either. This wasn't my setup that I took. But I'm just showing you guys opportunities that present themselves, right? So that when you guys see them, you guys can take some of these opportunities yourself, right? A lot of these wicks would have scared me out. So if I were in this trade up here in profit, I probably would have moved my stops to break even. So let's see, we have 10 pip stop loss. We're up only about 3 pips, but then we did tap 10 pips, but then it pushed back. So I mean, I would have left it open because it's not even a 1-to-1 right now, but would have been stopped out. But guess what happened? You manage your risk, you lost 1% or 2%. And also guess what happened? Price came down to where? Our trend line, point A, point B, point C into the future. We're down at the trend line. Now what we want to see, the next candle close bullish. All right, so the next candle didn't close bullish. We had the support form right in this region here. But if we jump up to a 30-minute time frame, guess what? We have a solid bullish engulfing, right? So we're still just managing, just watching the charts. Right now it's like 9:30 a.m. Some of you guys, you may have had a buy limit set right here, right? Where if price came down here, it would have clipped you in the trade and pushed you up higher. If you missed this setup here, you would have got clipped in right here. Stop loss set the same way, because this was, a London move. This could have been a New York move to push, right? Because at this point now, the New Yorkers are in the market. They're the big volume, big candles, right? So we're pushing, boom, boom. Another TP would have been hit right there. Still not in the trade. Now we got consolidation, prices ranging, moving sideways. At this point, this is when I was watching it and I was saying, price is going to come down, tap the moving average, or excuse me, not tap the moving average, but tap this trend line and then push up. Resistance right up here in this region, right? Boom, we have a massive sell-off, right? And where did it go? Directly to the trend line that was drawn out when? On January 5th. It is now January 6th. We're still respecting this trend line. And then we had what? Support form. Price stopped right here, dropped down to a 15-minute time frame. Let's look for our resistance that price can't break above. Boom, we formed resistance. Now we broke above it. This was another opportunity right here. Close right there. Stops below these lows. We targets our 3-to-1s. Right, we get stopped out, oh well. We hit TP, oh well. We touched the trend line twice, Now we're back in profit. We're moving, boom. We hit our TP, right? Mind you, these are all buys. Why? Because on the larger time frame, we're bullish. So people are moving with the trend, and the trend is bullish. Don't be trying to take sells when the overall market is bullish, right? Big banks, they're going to be moving up. I mean, these large candles are big banks moving price back and forth, but the overall direction of the market is up. So don't take sells when on a higher time frame, it's telling you the market is going that direction. Because the thing is, what you're doing when you take sells, you're taking counter trend trades, and you don't know how far it's going to go. So you might want a 3-to-1, but you might be risking 15 pips, and it might not retrace 45 pips. It might only retrace 10 pips, right? So you just got to be mindful of that. As a beginner trader, I would never recommend you counter trend trade. Follow the trend, draw your trend lines, follow the trend, right? So boom, broke above that. Now we have broke above resistance. We want resistance to turn into support, right? Price is doing its thing. I believe I took this setup here. Oop, let's put that back. Where we at? Yeah, this is definitely the setup that I took. So let's go back. So this is the move I missed. This is the move that the reason why I knew where all of this was at is because I anticipated this happening. I anticipated price coming back down here, coming to support, finding some level of resistance, breaking above resistance, and then pushing up. Did not set a buy stop, did not set a buy limit. I personally want to see the candles form, close, and press buy and execute. I personally want that. If I don't see that, I don't take the trade. I'll set buy stops, sell stops, or buy limits, sell limits. If I'm up watching it, but I'm looking at a different pair, I'll do that. But if I go to bed, I don't want it, because the thing is, God forbid, or let's say price pushed down and then created a wick, got me in a trade and just continue to push. That would have been a trade that was just could have been avoided if I were up looking at it, knowing that, okay, where the 15-minute candle is still open. It hasn't closed yet, although it's bullish. I'm not going to jump in until it closes, right? Because you want close volume. You don't want to be jumping into trades that are open volume. It's never good. So at this point, I drew my fibs, right, from this low here to this high here. Wasn't waiting for a 61 retracement just because we were just in a massive push, and it was only 6 a.m. So I figured that, all right, we're pre-New York. New Yorkers are going to come in. They're going to see this initial push and then continue to push the market higher, right? So at this point here, I saw that we got stuck right in this region here, which could have been considered the 23.6 level, right in this region here. So drop down to a 5-minute time frame. I drew my trend line, right, from point A, point B into the future, waited for the break. Eventually, price formed this level of resistance right here, and we eventually broke above that. Once we broke above that, I had 2 trades opened up, right, because I was only targeting 1.8. So I had 2 open trades. I had one with 4 lots, and then I had another one with 3.75 lots, if I'm not mistaken. Right, both set at the same target. This 140.943, 140.946, I believe it was, with my stops right down here in this region. Right, got immediately clipped into the trade, experienced a bit of drawdown. I want to say it was like 2-3 pips worth of drawdown, not much. Yep. And then immediately price turned around into my favor. So essentially what happened was price broke resistance, came back to retest resistance as support, and then immediately turned around and moved in my favor. So, and then clipped my take profit. I think this trade is actually set up. Let me see something here, because I was, make sure. Yeah. That's perfect. It came real close. It actually came real close to my stop loss, but never hit my stop loss. It was probably like half a micro pip to a pip away from my stop loss. And then it just, completely annihilated TP. Once that happened, that's when, let's see where we at here. You know what? I did not take the trade right here. I took the trade right here. Yeah, 7 a.m. 6:30, I was making coffee. I wasn't even up for this move. I saw this move when I came on the charts. I waited for the pullback for a retest of this trend line right here, because we had a point A, point B, waited for the retest, form support. I knew that there was like a little bit of resistance right up here in this region here. Wanted to get in on the market. I put a buy limit right here in this region, and then I clipped it, and then it immediately ran to my take profit. That's where I was at. Yeah, I was gonna say, I don't remember being so far in drawdown. I remember looking at the charts and it was just immediately in profit. Yeah, so it clipped me there. Both trades were clipped at the same time. They both ran the TP. I ended the day off up $740, I want to say, on these three trades. Guys, it seems complicated. I know it does. But trust me, it's very simple. It's a bunch of simple concepts that you just have to put together and know when to use them. I know a lot of you guys, or I have a select few that actually reach out and, ask questions, and, I read the questions, and I try to answer them as best as possible. But trust me, you watch these videos enough, it's going to make sense. Test, back test, continue to test. As you can see, I don't have a bunch of indicators, on my screen. I don't use, RSIs and MACDs and this and that, ATRs. Like, there's no need for all of that, because price is your best friend. Those indicators are based off of what price had already done, right? In order for the next dot to be formed on this 1 minute candle or this 1 minute chart, the candle has to form and close. So if the candle forms and close, then this is going to form a new dot, and that's going to be the next 1 minute candle. Same thing applies for like the 1 hour, right? You got your moving averages are here pointed up. We know that, right? But in order for the moving averages to form another point or another level, the next candle has to form and close. So why not just look at the candles and see where you're at in the market based off of the higher time frames, the lower time frames, and piece everything together? If you know the price is going up, be bullish. Only look for buys. Don't be buying at resistance. Buy at support. Buy at a trend line bounce. Buy at a break of a trend line bounce, right? Or a break of a trend line. Look for things like that, right? I want you guys to really focus in on the charts, right? Focus in, dial in on a couple pairs, see what's happening, understand its tendencies, understand when it moves. And I promise you, trading is going to become so much more simple, right? Risk 1 to 3% per trade and have fun trading, right? This is a learning process. It's always going to be a learning process. So if you don't enjoy learning, this game may not be for you. But if you're a person that really enjoys learning and challenging yourself, trust me, you're gonna love this till the day you die. Yama trades, I'm off the charts. All right, now that you guys got the pre-analysis, the analysis while I was in the trade, and then the execution to close the trade, I want you guys to really think deep, watch this video, go back, look at it over and over and over again, see my thought process behind jumping into this setup. And notice how I'm not jumping into many trades. I'm not looking at, 6, 7, 8 different trades at the same time. I'm looking at one pair, sometimes 2 or 3, looking for the setup that makes the most sense, that has the highest probability of moving in my favor, and I'm executing regardless of if I have doubts in my mind. If the setup plays out the way that the market is showing it, I take it. I execute on that trade. And I want you guys to really think about that when you're taking your setups, whether it is you're trading Euro USD or UCAD. If you see that the market on the higher time frames is doing something and it aligns with the lower time frames, execute on the trade. You know, make sure your stop losses are placed, your TPs are placed, and execute on the trade. Don't hold back, because the thing is, Steve Kerr said this to Golden State, his team. He said, you only miss shots you don't take. The only missed shots are shots you don't take. So if you're, you know, in this rut, or you're thinking to yourself, how can I grow my account? You can only grow your account by taking trades. Look for those high probable setups, execute on those trades, you know, and potentially you'll see your account grow. Now stick around, you know, this page long enough. You will learn a thing or two from the way that I trade. I know there are a million ways to trade out there, but you know, my strategy, the way that I trade is the way that I trade. I don't deviate from the plan. I may take different types of setups within my type of trading style. So, you know, if you like the way that I trade, you know, I highly advise you to subscribe to the page, like the video, turn the notification bell on so that you're alerted when I do drop new content. You Trexo family, you Trexo army, you know, thank you for tuning in on this video here, and we're out.